Falling gas prices and oil prices, worries about the situation in Iran, and rising interest rates. Are stocks still a safe bet among all this economic jittering? Joining us now, Jordan Kimmel, market strategist at National Securities. And Jordan, we should point out here, you've been a proponent of the stock market even through some of the down times, but you still stress we need to be looking at the right companies and not necessarily large caps.
Right, no, absolutely. I think that, and we're right in the earnings season, so everyone gets to show their cards right now. There are certainly the mid-cap, the smaller cap indexes. You don't have to go all the way tiny. These indexes have hit all-time highs, even as recently as last week.
So some of the large caps you think may be slowing down growth in the market a little bit. So look beyond the overall number.
And they're holding back. It looks like the market's not doing much. The market has done a lot in the last couple of years.
You mentioned earnings. Earnings season is here, and companies have projections, and they've been beating expectations to some degree. Do we put, though, too much emphasis on a company's earnings when we judge their success?
Well, no, really clearly, Ronnie. What I've been talking about all along is the fact that Wall Street's consumed with bottom line earnings, and even though they've done a great job in cleaning up a lot of the accounting messes, the way to look at companies is by top-line revenue growth, a margin acceleration. We've developed something we call Magnet Stock Selection. It goes way beyond the bottom-line earnings, which are still engineered at best.
If a company during earnings season doesn't meet its expectations that it set earlier in the year, it could be in trouble by the SEC. It could appear as if they tried to inflate their earnings projections. How are companies dealing with that?
Well, you know, it's really pulled in the horns on all the analysts and companies themselves. They're very, very careful not to really talk up their business. To forward-looking statements have come in a lot. It's created a lot of caution, which probably has dampened the market. And then companies are still, though, able to report great cash flow. There's record cash flow and cash on the books right now.
So companies that really are doing well may actually be lessening their expectations, lowering their expectations for fear of it being misconstrued as a move to inflate the company.
It's exactly the way it's working, and yet corporate earnings are strong, but hard to find a CEO getting out there really bullish and really telling his story enthusiastically. They're afraid to do it.
Well, we'll have you back as the earnings season continues throughout the year here. Thank you, Jordan Kimmel, market strategist at National Securities.